This is an update on Chainlink, and after our big crash last week, we've had a bounce, and things are looking somewhat optimistic, but we definitely have some tests overhead before we're completely out of the woods. So this is the 1 hour chart, and we were expecting some downside follow-through action since our last update. Once we broke support at 1143, it was just a matter of time before it started descending, and Chainlink was one of our earlier indicators of an impending crash. And turns out that all the other coins did follow. It also turns out that Polygon may have been our actual first indicator. I hadn't noticed it, but Chainlink was my first coin to actually break its support. And therefore, it was a harbinger of things to come. We've had quite a smackdown. We had our low hit on May 12th, 2 in the morning, early in the morning. And if you bought the dip then, good job. Congratulations. It takes a lot of guts to do it. And you're probably up pretty good right now if that happened. I actually did buy my position back. I sold 50% of all my coins, and I did buy back around that time. I didn't catch it perfectly, but pretty good considering that it happened so fast. And well, we may be done with this crash. So as we mentioned, we got that fifth wave down. We hit somewhere, actually we hit the 1.764 extension perfectly, 527. So when we look at this chart, that is our standard fifth wave target. So it hit it almost on the nose. Now that's the bigger picture. I'm going to shift into the 5-minute view just to go over the anatomy of the structure of the rebound so far. So initially, it looked like we had a very clear, impulsive 5-wave rally in place in which we had, again, our bottom hit just about 530, 529, something like that. And you could count a 5-wave rally. This could be a 3 and a 4 and a 5. A couple of different ways to count it. The primary count that I have right now is that we have a 1-2 down here somewhere. We have a third wave up. And which also subdivides into 5 waves. So you got a 1, 2, 3, 4, 5 there, clear 4-wave pullback, and a 5th wave higher. The 5th wave went a bit lower, went a bit higher than I would have liked, but we're holding so far. Now, the alternate pattern, I've been putting this in the community post, is that this is actually a fake out in which we have a clear 3-wave zigzag pattern up. So again, an A wave, B wave, and a C wave. And while some of the other coins have put this potential on the back burner, Chainlink and other coins have not. So we may actually have a downside setup in place. This could be counted as a first wave down and a second wave up. It does fit the proportions appropriately. And with this extension, Fibonacci extension built out, that could have us hitting that same bottom again, maybe a double bottom. I wouldn't expect a lower low necessarily in Chainlink if that does happen. So that's what we're looking at. Otherwise, if we are following blue, we do have 5 up. This would be best classified as a larger first wave and a second wave, and possibly that's the nested 1-2. So we need to see some upside action. If that is the case, here's what I'd like to see. If I move my Fibonacci extension up, assuming that this is actually a second wave bottom right here, we want to be able to break through our pivot zone. So that would be the 811 to 846 region. If we can blast through that and stay above our 0.618, the 811, that's a very strong sign that a true third wave is underway. And we'd likely get up into the $9 range relatively quickly. And well, a lot of the losses that a lot of us may have taken would disappear pretty fast with an eventual top in the 10 to 1142 range, $10 to 1142. So that's on the small picture. I'm going to go back to the, well, I'm going to go to the bigger picture. This is the logarithmic daily chart. And I do have these charts available in the links below. So check them out there if you would like to take a closer look. But obviously there's been some changes. Has Chainlink's reached its expected target? Yes, we got all the pullback we could have wanted and more. So we were expecting our pullback to get us into this box. A C wave relative to the A wave will typically hit the 1.0, 1.236, 1.32, or 1.61 extension. I wasn't expecting us to get down below the 1.32 extension. That would be at 574. But as I mentioned, we touched about 530. So we spiked just below the box. And the rebound has been pretty furious ever since. So right now, the primary pattern is that the bottom is behind us. That's red. So we're done. We should see some continued rallying to the upside relatively soon. The alternative is that we have a lower low. And I know on the smaller picture, there isn't a clear projection. Although if we zoom out to our bigger extensions here, could see a bottom of about $4.04. That would be the 2.0 extension of this overall crash. As I mentioned, we hit the 1.764 extension. So 2.0 is the other common extension standard for a fifth wave down. And based on that, again, 404 would be obviously below the box. would be between our 1.618 and the 1.764 extension. So that is a realistic target. So I'm going to put that orange there. Again, I think I have 415 to 339, somewhere in that range. If we have another spike low, it would probably be the end of it, because when you look at this MAC, the MACD, there's a divergence. We're starting to see this thing curl back up. So that's a sign that either we're done or we might have a little lower to go. We would expect to see the MACD keep coming up as we get that lower low. It would be very short-lived, just as the last spike down was. So I wouldn't expect this to be a prolonged bear market. Now, what to expect next? Again, we did project out what our upside targets would be like. We want to see us ascend from here relatively quickly into the $9, $10 range. Typically, once you have a bottom like this, it is a little tricky to calculate where we're going to go. You often have symmetry between the descent and the ascent. So based on that, I'm going to assume that our first wave is going to get to about where this fourth wave bounce was on the bigger chart, bigger scale fourth wave. That was put us around about $18. So if we get to about $10, we'd probably have some more rallying to take us there. This will definitely change. It's a very rough estimate for where we're going to go. It's kind of tricky to figure out where we're going to go without more of a first wave and a second wave in place. So the best way to make projections is to look at the big picture chart. Haven't done this in a while, but we have our whole pattern from 2017, September 2017. So I'm calling this a first wave and a second wave. And based on the internal proportions that we've had, that's a third wave there, fourth wave, and a fifth wave. So I'm counting this entire thing as one big impulse. Now, there's a chance that this isn't actually the first wave top. I'm sorry, the fifth wave top. Maybe that was a third wave top. I'm counting a lot of other coins like that. This may have been a fourth wave, not a second wave. Although, when we look at how deep we have pulled back, this is very credible as a second wave. We went deep enough. So this Fibonacci extension here, I know there's a lot of clutter. I'm going to zoom in a little bit. We want to see at least a 38.2% retrace for a second wave. And we absolutely got that. We went a little deeper than 38.2. So that is sufficient for a second wave. If we went a little bit deeper, probably even better. It wouldn't concern me. That would make it more likely that it actually was a second wave. And if that is the case, we expect to see a lot of upside ahead, because a third wave would be spectacular relative to what we've seen so far. So in the short term, we don't know if that was a third wave top back there in spring of 2021, or it was actually the fifth wave. Regardless, we have some strong Fibonacci resistances overhead. So we got one at the 0.382 extension of this entire structure, including the recent bottom. So $50 would probably be a good range for at least a larger first wave to hit, if not a top. If we really are just going to have one more rally for a top, I think we're going to get in this blue box up here. So $97 would be a minimum target, and possibly up as high as 193. Again, we don't know until we have more of a structure in place. So once we have more impulsive action, we can make a more clean projection. That'll give us a better target in the box. Now, if you're looking to buy, you haven't bought yet, or you're looking to buy more, whatever it is, it's not a bad time to buy now, because we have some evidence that we have a 5 rally up. We've had a bit of a pullback and things are looking somewhat bullish. Again, we have this ominous downside pattern ahead. When you compare the downside potential to how far up we could go, it's really not that dangerous in terms of just that. Now, if you want to manage risk, you can dollar cost average in. You can buy multiple tranches. You could just put a partial allocation right now, or you can wait for the bigger impulsive pattern to finish. So like I said, that's a first wave. Second wave, I'm actually going to draw this out to make it easier to follow. Assuming that is our first wave done, we have a second wave in place. Third wave gets into the $9, $10 range. Fourth wave could come down to about $8 or so. And once we finish somewhere between $10 and $11, I'd expect us to pull back to about where our fourth wave fell. So you should be able to buy somewhere between $9 and maybe $10, $11, something like that. Now, if we have a deeper retrace, so be it. If we have a clear 5-wave pattern like that, it'll be a much more high confidence buy. So those are some more places where you can continue to buy the dip, because again, these patterns, they don't happen within hours. These are multi-day, multi-month, multi-year patterns. So again, plenty of meat left on the bone. Don't feel obligated to buy right now if you don't feel comfortable, but it is much safer to buy now than it would be once we go up rallying. So we're going to have plenty of tests overhead. We need to see some more confirmation, complete a bigger impulsive rally. And again, we need to make sure we maintain this low here. So that was about 663. If we break that 663 low, might be on another crash lookout. Got some yellow lights flashing. I'll have updates in the community posts as well as my overall crypto update. So check those out in case I don't get around to making a specific Chainlink update. Subscribe so that you don't miss them. And until next time, thank you for watching and happy trading.